The connection between CZ and SBF. The cryptocurrency community and wider financial industry were shocked when FTX filed for Chapter 11 bankruptcy, but not many knew Binance had any role to play in it. FTX Trading Limited, commonly referred to as FTX, is a crypto firm launched in 2019 that runs a cryptocurrency exchange and crypto hedge fund. It was the third largest cryptocurrency exchange by volume and was founded by Sam Bankman-Fried, also known as SBF, and headquartered in New Providence, Bahamas. FTX made more than $1 billion in revenue before it went bankrupt in November 2022. Investors grew suspicious when it came to light that Alameda Research, a partner of FTX, holds a substantial part of its assets in FTT, FTX's native token. This discovery pushed CZ, more formerly known as Changpeng Zhao, the CEO of Binance, to announce that the company is liquidating its entire FTX token holdings. This announcement triggered massive customer withdrawals from FTX. As expected, FTX couldn't meet the demand for customer withdrawals. Binance is a rival firm to FTX. Some have suggested that the rivalry continued to Binance playing a major role in the capitulation of FTX. However, CZ has denied any such accusation. SBF versus CZ. Initially, CZ and SBF were business partners and owners of the two largest cryptocurrency exchanges. They were also business partners, with CZ acquiring a 20% stake in FTX for a whopping sum of $100 million just 6 months after FTX was launched. Both men might have built multi-million companies, but differ in background and upbringing. CZ, a Canadian citizen and a computer science graduate from Montreal's McGill University, was born in Jiangsu, Shanghai. He moved to Canada with his dad at the age of 12 and has previously worked on programming systems for Bloomberg and the Tokyo Stock Exchange before founding Binance in 2017. On the other hand, SBF was born in March 1992 and graduated with a bachelor's degree in physics and a minor in mathematics from the Massachusetts Institute of Technology. Both parents were professors at Stanford Law School. SBF was brilliant in mathematics and even attended Canada USA Math Camp. He worked briefly at a proprietary trading firm, Jane Street Capital, where he traded international ETFs. In 2017, he co-founded Alameda Research before founding FTX in April 2019. How it all started. Despite their different backgrounds, the cryptocurrency industry brought CZ and SBF together and drove them apart. The first signs occurred on November 2nd during the annual Web Summit in Lisbon, Portugal, where the Binance chief executive was scheduled to deliver a speech. The summit is a meeting of the movers and shakers of the tech world. Like he always does, CZ spoke on the long-term future of cryptocurrency and digital assets. By the time he was done, CoinDesk, a crypto news service, had made public a balance sheet from Alameda Research, a sister company to SBF's FTX. The balance sheet shows that despite SBF's claims that the two companies are independent, separate companies, they are not. According to the data on the balance sheet, Alameda holds FTT worth billions of dollars, and it has been using this as collateral to obtain loans. Although Alameda holding FTT running into multi-million dollars isn't wrong, it reveals that Alameda's foundation is based on its sister company's native token and not on an independent asset. It also proves that SBF's claim that both companies are independent and operate separately is false. In reality, SBF used a financial loophole to hoodwink investors, created its own currency, and took loans while using the currency as collateral. The revelation worried investors, but before the week ran out, CZ announced that Binance was liquidating its FTT tokens in light of recent revelations. Having invested in FTX as a shareholder in 2019, Binance held about 5% of the total FTT supply as part of its settlement when it exited the shareholding in 2021. The announcement by CZ sent investors into a panic mood and ripples throughout the crypto world. It resulted in a decline in the price of cryptocurrencies and especially FTT. CZ versus FTX collapse. Although sources close to Binance have claimed that there was no ill intent towards SBF, FTX, or FTT, many people did not see it that way, especially since the announcement included a reference saying that Binance does not support people who lobby against industry players. Several people viewed the statement as a reference to SBS lobbying of United States Democrat politicians. The next day, SBF denied the claims, tagging them false rumors. As if to confirm his statement, CZ announced on November 8th that Binance had signed a non-binding letter of intent proposing to buy FTX and rescue it after FTX asked for their help. SBF also confirmed the statement to acquire FTX on the same day. However, both executives noted in their statements that the transaction is subject to due diligence. Following this announcement, the price of FTT went down by more than 75%. Everyone believed that the crisis was finally over. However, on November 9th, CZ released a statement saying the acquisition would no longer go ahead. He revealed that he tried to salvage the situation, but that the issues were beyond their control. That same night, Twitter users witnessed a war of words between the embattled CEO and Binance chief, CZ. The problem started when CZ responded to an interview by an ex-FTX spokesperson who insinuated that Binance had issues with regulators. CZ made a Twitter thread questioning O'Leary's defense of SBF, called SBF a fraudster, and accused him of attacking Binance and him personally. He also said that SBF tried to reduce the value of Binance's stablecoins through Alameda. SBF replied to CZ on Twitter, telling him that he won and should therefore not lie about the events surrounding the failed acquisition of FTX. SBF revealed that CZ allegedly attempted to abandon the deal if FTX didn't add about $75 million. CZ also indicated that he had suspicions about the growth of his rival's company, marketing strategy, and extravagance, despite Binance being much bigger than them. The past few days sent investors rushing to withdraw their money from FTX. Still, the unusually great demand could not be met by FTX, with the company's website informing investors that it could not process withdrawals at the time. Rumors started making rounds that SBF mishandled the client's funds. As if to confirm the rumors, SBF tweeted on November 10th that he had messed up and should have done better. The next day, FTX filed for Chapter 11 bankruptcy protections in the United States. The move also included Alameda and other subsidiaries. Despite the bankruptcy, SBF tried to save his company by raising funds, but the attempts were unsuccessful. The bankruptcy announcement did not deter SBF, which appeared positive, stating on Twitter that he hopes things will recover. Many investors and government agencies did not share such hopes with him. That same day, the Securities Commission of the Bahamas seized all the assets of FTX Digital Markets Limited, a subsidiary of FTX. Japan's financial services also suspended FTX Japan. The story was the same in Australia, as the company's subsidiary in Australia was also under administration. FTX collapse in the crypto world. FTX's collapse affected several crypto firms, and especially those affiliated with it. For instance, BlockFi, a crypto lender connected to FTX, announced a suspension of operations. The value of Cronos, an exchange token of Crypto.com, plunged more than $1 billion, following in part the collapse of FTX. Other crypto firms like Genesis, Grayscale, Gemini, Galois Capital, and Galaxy Digital have also been affected, with some recording a significant decline in value. Nevertheless, crypto firms were not the only ones affected by the collapse of FTX. Many institutional investors like Temasek, SoftBank Group, Tiger Global Management, Ontario Teachers Pension Plan, BlackRock, Sequoia Capital, and Lightspeed Venture Partners also stand to lose money due to the collapse of FTX. Similarly, several public figures like Stephen Curry, Shaq O'Neal, Kevin O'Leary, Tom Brady, and model Gisele Bündchen were also affected or worked as brand ambassadors for the company. After he filed for bankruptcy, SBF stepped down as the chief executive officer. He was replaced by John J. Ray, a restructuring lawyer with experience working on the liquidation of Enron, the collapsed energy giant. In mid-November, John Ray revealed, in a sworn declaration submitted as part of the bankruptcy proceedings, that Alameda Research lent $1 billion to SBF and more than $500 million to Nishad Singh, the co-founder of FTX. Apart from the liquidation of Enron, John Ray has been involved in the liquidation of Nortel, Overseas Shipholding, and Residential Capital. Still, he expressed shock at the level of financial indiscipline he witnessed in FTX, saying that he has never seen that sort of failure in his career. Ray's revelations convinced many investors and crypto enthusiasts that there was nothing CZ or Binance could have done. CZ later noted that he knew that SBF was desperate when he reached out to him for a bailout. He said that when SBF reached out, he thought he would reach an agreement for the FTT he threatened to sell in the open market. Instead, SBF suggested he acquire FTX. The United States and Bahamas police forces have opened an investigation into the collapse of FTX. On December 12th, SBF was arrested, and he has been charged with up to 8 counts of fraud and can face more than 100 years in jail if convicted. He was released on December 22nd on a $250 million bond. Have any clue what would happen next? Feel free to share in the comments section.